Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how are you doing?
I'm doing well in you, Dion.
Very good, thank you. Today is episode 15, so we're really starting to get nice momentum here, and we're starting to move forward quite nicely. I think what we just need to upfront say, and I think going forward we'll probably have it as just a banner underneath there that first and foremost, we are not financial advisors. We are based in the bullion industry, and our experience or our knowledge is based on the time that we've spent here, and then also the amount of research that we've done through the years. That said, we are not financial advisors, and whatever we say, always go and make sure you check it with or confirm it with a financial planner or advisor or someone within the industry. The other thing also is right now, these are pre-recorded. And one of our top clients who watches on a regular basis, he actually highlighted that, and it is important. I think for when we do talk pricing, it's current for us right now in this time when this video will go out, which is probably a week from now. Of course, it's a different world. That said, I think more importantly is what we're actually highlighting here is we're showing you the markets, how they surging, dropping, and what are the influences and the things that are causing that.
Definitely. I mean, we've always said one of our main focuses and our main aims is getting information to people. Why don't you sell when it gets to a new high? Why don't you sell immediately when it starts dropping? Things like that. And it's about education, and that's what we're trying to do. It's, as you rightly said, do your own due diligence before you invest. Don't take somebody on the internet, use some video you see on YouTube, and chuck in your lot according to what they say. It's just silly. Let's face it. Do your own diligence. Make sure that you are comfortable with whatever you're investing in and the investments that you make.
Yeah, and again, we do pride ourselves on research. We do pride ourselves on the information that we're giving is checked and rechecked to make sure what we are saying is 100% accurate. But again, we live in a very dynamic sector, or any market is dynamic. As we're speaking right now, gold or silver or platinum or oil or soybeans or anything is going up or down depending on what affects it within its market.
Definitely. I mean, and geez, if we're speaking about the gold market, you just about need an auctioneer to keep up with what's going on at the moment. So yeah, a week can be a significant change. I mean, if we take a look at just what has actually happened over the past week, and this is going to be old news by the time we get the episode out, but it's probably going to have changed a ton again since then. I mean, just over the last week, we had the Trump tariffs announcements, and that caused gold to drop because there was a bit of fear from the investor side. People were selling off gold to cover the losses of the stock market. It plunged down to below $3,000 an ounce. A day or two later, it was back up above $3,000 an ounce. It went to 3,100, and then I think we were on a meeting. Was it 2 days ago? Monday it was. We were in a meeting, and I was looking at the gold price, and I interrupted, and I said, it's just crossed 3,200. And that was like, wow. And today I was doing a little bit of research and looking up a few things for this podcast, and I looked up and there was 3,300. I mean, we're sitting at 3,300 from where it was under 3,000 a week ago, and that's just absolutely insane.
And I think what we're really highlighting here also is the volatility that gold is showing right now. And it's definitely indicative of what's happening globally, what's happening in the US market, what's happening with you and foreign policy, which is right now is a pretty much a cowboy slingshot shoot and then ask questions later.
Yeah, I mean, the tariffs were announced, the stock market tanked, it crashed, gold went down. Um, I'm not going to speculate on what went on behind the scenes, but a day later it was announced, oh, these tariffs won't be implemented. We've put a 90-day freeze on it, and everything shot up again. Then China said, well, you know what? You excluded us from that. Here's some retaliatory tariffs to counter whatever you're putting on. And then the US said, oh, but then we'll put on more. And China said, okay, well, we've got more too. And, it's literally a school ground. My dad can beat your dad type of thing going on. And this is the thing. It's been up and down. Every time something happens, we're talking about the two biggest players in the world economy. And when they say and do something, that has ripples throughout the entire global economy, and not just ripples, tsunamis. And what's going on at the moment is certainly it's causing so much doubt, it's causing so much uncertainty in the world economy that it's actually quite scary, to be honest.
What's quite interesting is if you had looked maybe 20, 30 years ago, the US was the dominant player within the market. They were the biggest market, tied with the rest of the Western world, which is mainly the European countries. And again, they dominated the market where, the petrodollar was, the dollar was the global currency, and to a degree still is. But you see how China has emerged over the last couple of decades to become the biggest economy. And following it behind is also India, that there's these two massive economies that are growing at rates that are far outpacing the US right now. Other thing there also is you know that within the US, and you mentioned Donald Trump, and there's a concern that there is a crisis of leadership in the world right now. And if you look in history, a lot of these times is when things become very black or white, very fascist or non, or very right wing versus left, and of course the battle lines are drawn, but also becoming more retaliatory. That there is a problem. There's a definite problem with how things are being managed right now, and the level of government leadership right now.
Very much so. And also the other thing is, these trade agreements that are in place, the tariffs that have been set, it's been forged through history. It's been forged by wars. There's agreements were made between leaders back then, and to those were honored for decades, and suddenly to come in and say, hang on, we're not happy with that anymore, so you're getting punished because we perceive a slight on our end.
Yeah.
And sometimes it's not even that it's unfairly being tariffed or anything. It's just a trade deficit, and nobody's at fault for a trade deficit. It's just what happens. You've got more people than me. You need more products. I can produce those products. You buy them. You also produce products, but I don't need that much. I don't buy as much, and suddenly that's seen as unfair. I mean, it's a little bit silly, to be honest. And suddenly, with all of these agreements that have been forged throughout history, they're being thrown out the window. And like the EU, Canada are sitting there and going, but hang on, you're supposed to be my ally. What's going on here? And as you said, China's been sort of silently slinking into view in the background. And now they sit there and they say, listen, guys, we can do some business. So that's the thing is, we have these traditional allies that have been working together for decades and decades, and suddenly all of that is thrown into question. All of that is dramatically shifting. And where's it going to go? Well, let's sit back and watch.
Yeah, and again, I mean, but if we go and just look at, you mentioned gold. So last week there was a massive pullback, even in kilograms. It had dropped over 100,000. It was sitting around, I think, about $97,000 a kilo. Suddenly this week it shoots back to 100,000 and just keeps going. I mean, it's at $106,000 a kilo.
Yeah, it's been crazy. I mean, as I said, Monday I was sitting and I watched it go past 3,200, and I thought, wow. Today I'm sitting, I watched it go past 3,300, and I'm just, okay, what's next? Where's next? And I mean, Goldman Sachs have again revised their projections for this year, this time to $3,700.
Yeah.
I mean, it's gone from, I think it was 3,100 originally. We up to 700 now. 3,700. That's what? That is 20%
Yeah.
of what it was originally that it's been revised. And it goes to show Goldman Sachs are taken aback by what's happening here.
And again, they've got teams of people and that will be continually speculating, but also doing the sums, doing the maths, and saying, this is where it should go based on this and that. But even there, with all the expertise in the world, they are guessing right now because we're in that dark space. We know it's going up without a doubt. Do we think it's going to be pulling back? Not anytime soon. The world's just not in a position. And this is what favors gold and favors bullion is the world we're living in, the uncertainty, the economic uncertainty, the geopolitical things that are going on and so on. I mean, even the COMEX, which it's the second time in history that it's gone up. I think there's about 10 million ounces now that were in the COMEX recently. And the COMEX is the American Bullion Stock Exchange. So that you got the LBMA in London and generally prices taken from those two exchanges. But they had 10 million ounces. That's grown to 40 million ounces in the last short period of time. The last time that this actually happened was in 2020 during COVID. And you can see that there's definitely some big buyers in the States, and some people have speculated it could be government themselves, the American government, making sure they can increase their reserves and so on. But it's showing the appetite for buying and holding gold is unprecedented right now.
No, definitely. And it's interesting that you mention America buying gold and is it the government? Because here's a thought. Firstly, Donald Trump loves gold. I mean, you just look at Mar-a-Lago. You
just go to the Trump Towers and some of those videos of inside, everything's gold.
So yes, it's no secret he loves gold. He's also, made the offhand remark, oh, it would be great to get back on the gold standard. Now they're doing an audit of Fort Knox to try and evaluate and revalue that gold. Do you think maybe there's something brewing there?
It could be. I think me personally is you got a lot like the Goldman Sachs, the JP Morgans, a lot of those financial investment institutions are definitely buffering up their stakes in gold. And that's why there's been a major draw. I mean, the LBMA had a lot of their gold reserves drawn out, processed in Switzerland into fine gold bars, and then sent to the States in the type of bars that the US would use. And that's been going continuously over the last couple of months. The interesting thing here is it's highly likely that government is part of that buying frenzy. We know for a fact that China is buying at unprecedented levels. I've got a lot of people and clients in Hong Kong and in Dubai and I speak to them at a lot of the times, and they all talking about the demand and the appetite coming from China that whatever you can sell, they will buy.
Definitely. I mean, at the moment, that's, I think, the sentiment across the world, is, especially among institutional investors, is we need a safe haven. We've got King Kong Godzilla going at it, and in the middle is not Tokyo, it is the global economy. And that's the situation we're in. Everybody is very, very worried, and they need that safe haven. So we're buying gold, and it shows. It shows. I mean, under 3,000 to 3,300 in the space of a few days. There is definitely an appetite for it, and it's global. You said China's buying, America's buying, EU is buying. I mean, everybody is investing into gold. Everybody is looking for that safe haven.
Also, I mean, now we just do a little sidestep to gold's little brother, silver. And same thing, when there was a pullback in gold, silver also dropped from the 30s into the high 20s. And again, it's gone back up. We're sitting just under $33 an ounce right now.
Yeah, I mean, I was looking at it the other day and I thought, okay, that's not doing so well. But it's been more resilient than it has been in a long, long time, and a lot more stable. I mean, we always talk about silver being up and down, with gold being a bit more stable, and that is due to the fact that silver is industrial. It is an actual industrial commodity, so demand from the industry has a big factor on that, and of course demand on the industry is determined by the economy. So silver is very closely tied to the economy. But oddly, it's been very stable. It's just been sitting there. Yes, it's been going down, it's been going up, but not at the rates that we've seen previously. We've seen it shoot up, we've seen it come down in the space of hours. Right now, it's been sitting around that $32, $33 for, I think, the majority of the year.
Yeah, very stable. And again, we've spoken in other episodes where this is a clear indication that silver is going to start to make that move up. I mean, we've been talking about that for the last 3 years, and at some point it has to come good. The difference is, barring last year where we saw that stability of silver through the year, where it was consistently in the high 20s and it held its line that whole period of time. 2025, it's kept that same track going and it's been building up. But we can definitely see, based on the demand, supply, and all the industrial applications, which we've gone through a number of times, is that silver is due for that real big jump.
And another thing that is in silver's favor is the gold-silver ratio.
Yes.
Right now, it's sitting at 100, and it's been sitting at 100 for a couple of days now, which is extremely high. Usually 70 we would classify as the top end of where it should be, and that definitely, well, usually investors say above 70 you buy.
Yeah.
And it's sitting at 100. That gap has to close at some time. And what we've seen in the past every time is gold goes up, silver is slow to pick up, but then follows and outperforms it. And so now what we're basically waiting for is that pickup for silver to start. And that gold-silver ratio of 100 tells us that it's imminent.
Interesting enough, and we look at past performance with gold and silver through the different decades. We must also bear in mind, we seem to think that we're at the top end of this bull run. I don't even believe we're halfway right now because of the amount of instability. We are on the border of an official recession. The US is not far behind us as far as growth rates and that. So that's going to push the world just that further, where again we'll just keep kicking up. Again, things that lead to that is there's a massive pullback. Suddenly, a week later, it's back to where it was, and then it goes even higher.
I think, I was actually looking at it in live time today, and it hit 3,300 and almost $30 an ounce, and suddenly there was a drop, like a massive drop. It went back down to under 3,300 to 3,290. And a few minutes later, it was back up there. It was back above 3,300. Now, obviously, people saw that 300,300, and that's a psychological barrier that has been breached. So there's a sell-off, profit-taking sell-off. And it should have a bigger impact than what it had today. And it was a blip on the radar. And that just shows you how much it actually has. We just said Goldman Sachs predicting 3,700.
Again, and that's for the year. So we look at this bull run that the commodities are in right now, and I don't think we're even halfway through it, just with the amount of uncertainty in the world. And, I remember in 2024, we actually spoke about that, what was the outlook for the world in going into 2025. And my first reaction was, I think we're in for a tougher time. I think economically and geopolitically, I did always see that things would start to scale up. The fact that Iran and the US are now also playing in this geopolitical stuff is concerning. It's just upscaling everything. But absolutely, 2024, I saw 2025 as another year of absolute challenge. And you see it. You see it with massive inflation. You see it with growth rates and all that.
No, definitely. The state that the economy is in right now, it is absolutely tough. Are these tariffs going to kick in? If it does, that's going to be another blow to literally everybody. We're going to be selling this. There's 25% tariff on all cars being imported into America now. South Africa has a bit of a problem there because the automotive sector is one of our biggest financial sectors. Now, all of a sudden, there's a 25% tariff to one of our biggest exports, and that's going to drop. There's going to be some hardships there. Americans are going to be paying at least 10% more for anything that's imported, which is a lot of stuff in America right now. And if the additional tariffs get tacked on there, it's going to be a lot more. So you're going to have families that are struggling to keep up because everything is now 20-30% more expensive. And I see a really tough time coming.
So before we go into the macro, and that being more South Africa, we also wanted to kind of keep this a little bit lighthearted, and of course me and or Willem and myself being F1 or Formula One fans, we both kind of backing the same horse for this year. So Willem, I know you had some interesting facts that we just wanted to let the listeners know about.
But yeah, I was sitting there and I'm looking at these cars, and I mean, as you know, they are horrendously expensive.
Slightly.
So I thought, it would be interesting to see how does that compare, or how does that translate into gold. And so the first thing I had to do, of course, is see what one of those cars cost. Now, we're looking at anywhere from $12 million to $20 million per car. And it sort of averages out around $16 million. And so that's the baseline I worked on. Now, let's put it into a local perspective. That is 302 million Rand. 302,239,214 Rand if you take $16 million on the dot.
To the cent.
So just as an aside, that sum would make you one of the top 40 richest people in South Africa. Straight off. If you had that money of one Formula One car, you would be one of the 40 richest people in the country. So anyway, I thought, okay, let's see how much gold would that buy. So just give me a guess. How in kilograms? How much do you think it would be?
15 million or 16 million?
$16 million.
I would say it's 10. It's about a ton and a half of gold. Oh no, it's
You're a little bit off there.
150 kilos. Sorry, I might have had an extra.
That is some impressive math there, Deon.
I knew. Sorry, my mistake. I was working one decimal up, but it's about 150 kilos.
That is pretty darn impressive, because it's actually 151 kilos for an F1 car. So if we work that out, you get 189 grams of gold per kilogram. The cars are 800 kilogram at the moment, so it is 189 grams of gold per kilogram. So that would mean 6.07 ounces of gold for each kilogram of Formula One car on the road. Now, let's take that into perspective. Right now, if I was to walk into a dealership and buy myself the new Toyota Corolla hybrid, because it's sort of, an average everyday family car, that would cost you 560,000 starting point. And that's roughly where cars at the VW Golf starts at, I think 580 or 590, somewhere around there.
Yeah, it's a good baseline.
Yeah, round about there. So that translates to $29,645 if you're watching abroad. And you can buy a brand new Toyota Corolla with 9 ounces of gold.
That's crazy.
So for 1.5 kilograms of Formula One car, you can buy a brand new Toyota Corolla. So yeah, I just thought that was quite interesting. I expected it to be a lot less in terms of gold, but 151 kilograms will buy you a Formula One car.
That's phenomenal. And again, I think there are not too many people that could honestly say that they've got about that amount of gold. But again, it also lends to what we always speak about, and we always go back to the same point, is gold is infinite as far as time, as far as value. And again, what you buy today, 5 years from now, 10 years from now, the growth pattern for gold, even over the last 50 years, has always been going up. Whereas inflation goes up, goods go up, the currencies devaluate, and they're all going on a downward pattern. And this is one of the few things that still maintains wealth.
Definitely. And I mean, fiat currencies, as we've said many, many times, they are constantly losing value. And that's why you have inflation. That's why things get more expensive. It's not because they're worth more. It's because the money is worth less. It's as simple as that. We say you can't buy with 100 rands what you bought with it 5 years ago, that's because that 100 Rand is worth less. It's not that, the things you're buying is more expensive. Yes, from our perspective, it's more expensive because generally income doesn't follow inflation. So people are feeling the pinch all the time, and it's very rare that your income actually matches the inflation unless you get a big promotion or something. It's very rare that your income will follow that inflation, will keep up with the cost of goods going up, and it becomes more difficult all the time. And that's the difference in gold. Gold continues going up. The value stays the same. Fiat currencies go down, and that's why gold gets more expensive.
Absolutely. So another sidestep. So Bahrain Grand Prix come and gone. McLaren 1 and 3. So we're going into Saudi this next weekend. What's your thoughts there?
Well, I'm really hoping that the Ferrari can make that floor work. They had an interesting strategy in the last race. It didn't pay massive dividends, but it didn't do them any harm. They actually had a good race. McLaren, I mean, geez, they're so strong. And I think Norris is having a bit of a wobbly at the moment. I think he's being very hard on himself, but too hard perhaps, and that might be affecting his performance. But I think our boy Piastri is
Oscar.
Absolutely on a roll.
Showing a lot of maturity. Another youngster that's really impressed me is old Antonelli for Mercedes. I mean, from all the rookies, he's been consistently finishing up. I know Mercedes now, where we find certain points and their performances have changed, but he still started and finished, and he's been consistent as one of the rookies.
It's the old cliche: in order to finish first, you have to finish.
Absolutely.
And that's the thing. Yes, I could argue that he's got a much better car than the other rookies. But there's a difference between having the better car and actually keeping it on the road.
Absolutely. And I think any Red Bull driver that sits next to Max has shown they've got the best car. Well, they had the best car, they had the best backup, they had everything. Yet the performances versus Max, no one has come close. I think old Ricardo was one of them that was probably the most consistent, and to a degree Checo, not last season, the season before, he had a great season. But you can see that's that deadly chalice. It's like South African rugby to a degree. Before the Rassie era, it was always this, like, as soon as you get the mantle of coach, your time in rugby is limited. And of course, that's now changed because we've got probably, if not one of the best rugby coaches ever. But that same kind of analogy to Red Bull. And again, big problem with Red Bull, where I see it's going to play in favor for McLaren, is there's a lot of infighting, there's a lot of uncertainty, there's a lot of things going on there with the management, where also Verstappen's father getting involved, and then his manager getting involved, and then there's talk that he may look at Mercedes or may look at Aston Martin. So there's definite looks and there's definite uncertainty there that runs through the team. When you saw Red Bull at its best, when they, not last season, the season before, where they just cleaned up, it became boring because, at the start this weekend, he would win. If he didn't win, it would be due to some freak accident or something that happened that was not, you cannot build into managing the car or things like that.
Yeah, definitely. I mean, you mentioned Max's teammate, and we have to give kudos to Tsunoda because he seems to have gotten a grip on that car a lot quicker. I think it is an absolute nightmare to try and pilot that thing. It's very much set up to what Max wants, what Max prefers, and what Max likes, and the other driver just has to deal with it.
Yeah, and again, it just that's part of the problem, is the car was set up for Max, how he drives, and versus the other drivers.
But yeah, I mean, we're going to see in a few days' time when 3 tons of gold goes rocketing around, was it Saudi Arabia?
Yeah. Saudi Arabia, here we come.
I'm looking forward to it.
So, back into to precious metals, but now we want to look at the macro. As I said, South Africa. We on the point of come the 1st of May, is it 15.5% VAT? Is it 15% VAT? And what's concerning more than anything is we all getting ready for it. I mean, as company, we have a responsibility to make sure that we start to make sure our accounting systems are factoring that in. But the biggest problem is government right now are not saying it is going to be implemented or it isn't going to be implemented. It depends on who you speak to.
Definitely, it's kind of, we on the one hand we've got the ANC and the finance minister saying it's gonna happen. On the other hand, we've got well, they're not supposed to be opposition parties as it's a government of national unity, but you've got other parties in this government that are saying it's not gonna happen. I mean, well,
Again, for me, what it leads to, and this is probably the biggest thing here, is the biggest problem, and I said about leadership crisis we have in the world. And in this country, we've got a massive leadership crisis. The ANC, as used to be the dominant party, are no longer. In order to even form this government, they had to broker deals with their lifelong enemies to have a government of national unity. Did I ever think it would work? I always knew that fundamentally they would get to points like this where they wouldn't see eye to eye and there'd become a deadlock. And as a civil citizen, as a citizen of this country, it's not great because it creates this uncertainty that we cannot afford to have. Our GDP is at a very low level. Davy Ruot, one of the economists, he had spoken that the ideal where the rand should be is around 17 rand. If we look at the Big Mac index, and we've done that before, maybe we'll even look at that at the next episode where we can go into the Big Mac, and actually compare it and see, this whole thing on real value versus what we actually, as far as the rand, dollar, and so on.
yeah, definitely. We will definitely have a look at that. I mean, if you look at purchasing power of the rand versus purchasing power of the dollar, what you spend on certain things versus what you spend on other things, there are so many discrepancies, and it's so difficult to actually peg where it should be. I mean, you look at housing in America, and you've got people paying $3,700 for a New York one-bedroom studio apartment. On the other hand, you've got them buying iPhones for $1,000. Now, if you bring it back here, that iPhone is costing you 30,000 Rand, which is way more than $1,000, but you're renting a house for a fraction of what that one bedroom New York townhouse costs them. So there's this discrepancy between what is expensive and what is not expensive, and it makes it really difficult to pinpoint where exactly the rand should pitch. And yeah, as you mentioned, we've got this government that since 1994, the ANC has been in power unchecked, unchallenged, and they had free reign. If they decided this is it, that was it. Now all of a sudden they have to accept the fact that, but we can't just have what we want. And then you've got the other parties that all of a sudden have this feeling of, hang on, we can get what we want for a change, and it's going to cause friction. As you said, it's something we can ill afford right now.
You raise something that's very, very valid. And the other thing here is we are, as far as the GOA agreement with the US, it's pretty much almost certain that that's not going to be renewed with us. We're looking at the reason why they want to increase VAT is because, if we look at just basic accounting, if your expenses exceed your revenue, you're running at a loss. And SA Inc. is running at a massive loss. We're bleeding. We've spoken about it before, that literally for every rand that government spends, 20 cents goes to repaying the interest on loans that they've used to keep the economy running.
And that's just interest. That's not actually the loan repayment.
Yeah. And then if we look at that and then we say, how is it possible that we can navigate through this? And again, Darby Root could be correct that the rand should be around 17 rand to the dollar. The fact is, the performance of the rand, the lack of revenue, all these things are leading to, as far as an investment perspective, a country that's not worthy of any investment.
And that's the problem. As soon as we start, the foreign investors start pulling out, we suffer even more. And our government is desperate to raise money. And that's why they've got this extra 5% in VAT. It's not because they are making less off that 15% VAT than they did, say, 10 years ago. 15% is still 15%. It scales with the price. So you can't say that, oh, but things are 100 Rand now, where they were 50 Rand. So the government is only pulling in 15 Rands where, it's still 15%.
Yeah. And again, I think this what you're raising is that concern that there's just no solid leadership. I've always said when a government looks to increase revenue in a negative way, and I see taxation as a negative means of increasing revenue. Positive way is grow your economy, incentivize businesses to actually grow. In other words, have some more relaxed labor laws. I'm not saying people need to work in dirt poor conditions and need to be treated like slaves, but have an open market where people can be hired and fired a little bit easier. Look to the thing to even open a business in this country is a paperwork. Then you got the FIC. Then you got all these things that you need to comply before you can even start to think about operational things.
Definitely. And I mean, I think we've said it before. This is one of the most difficult countries in the world to do business in. And as long as that remains the fact, we're going to struggle. We foreign companies aren't going to be investing here. And because the economy isn't doing great, that's even less incentive for them. So, we sort of cutting ourselves off from that foreign money coming in, from those big foreign companies coming in, investing in the country, investing in infrastructure here, and setting up a presence. And until we can do something to address that, we are going to continue to struggle. Our GDP is going to remain as flat as it is now.
Well, as I've said, and I think it was in the last episode, the projection for 2025 was 1.7 or 1.8, and the government of national unity, the opposition part of that, said you'll be lucky if you get 1.2. And if we then consider the losses with the GOA agreement and what we'll lose in value as far as foreign revenue there, we will be lucky if we surpass 0.6, which was last year.
Definitely. But I mean, at this point, I think we've reached the stage where all we can do is sit back and watch and see what happens.
I think just in closing, and we need to also always remind that as a man in the street, we can't force change geopolitically or politically. We choose to vote and people vote, and every single voting or election, we like to believe that this is going to be different, and the same thing rolls out. So for me, and this is what I've found very interesting with gold and with bullion and people that are more attracted to that form of investing or alternative investments, is they start to form groups. There's a number of different WhatsApp groups, and the other not WhatsApp,
Signal, I think, or
yeah,
Telegram, or
Telegram.
one of those. There's so many.
Again, there are a lot of groups where people are banding together and saying we need to work as a community to look for best options. And gold, silver come out tops all the time as an alternative to a devaluing rand, to an economy that is decreasing. And again, with the growth rates, we've spoken of gold, and it's just strong movement. Same with silver. It makes absolute sense, again, that people should be considering moving parts of their portfolio into, or their wealth into gold and silver.
Definitely. And I mean, you're speaking about the devaluing rand, but we're seeing a devaluing dollar. We're seeing a devaluing rand. It's all across the globe. And if you actually really look at it, people are talking, oh, but we need a global currency or this, that, or the next. We kind of have one, and it's gold.
Yeah, absolutely. Gold is still considered to be one of the top five currencies in the world, if not now, probably in the top three. And again, it's not slowing down by any measure right now.
Yeah, no, we're in for a wild ride.
Willem, as we're finishing off, and again, if you do enjoy this, please share it to other people. It does help our channel to grow. And of course, we're passionate about it. We're going to be looking at some new things next week. We're definitely going to talk about the Big Mac Index, which is quite an interesting breakdown of actual real value and what your money actually is worth.
Definitely, if you enjoyed the episode, leave a like, and if you want to see some more, be sure to subscribe. And we'll see you guys in the next one.
Thank you. Bye.